All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. The first thing I want to talk about is what I'm seeing float around social media all over the place, and could address this question is, has crypto hit a local bottom, or maybe even a long-term bottom, based on the recent price activity? Okay, we've seen crypto dip quite a bit over the last several months, and I've seen a lot of pain in my timeline, but now we're starting to see a little bit of hope in this, and I want to leave my comments at the top of this video. We're also going to talk about a lot of other news updates that have happened in this space since our live stream yesterday. Again, we do these Monday through Friday on this channel. Just turn on notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them. Like, I'm never going to give you my phone number on YouTube. I'm never going to ask you to invest with me. I'm never going to DM you on a social network, to get you to join some sort of secret chat room. Okay, a pretty good litmus test for this is if I ever communicate with you online and ask you to send me cryptocurrency or something, make that person send you a video of themselves saying your name, okay, and what the request is, because it's pretty hard to fake my own personal image on camera when you do that. Okay, so anyways, we got people jumping in the chat here. We got Automatic Beats, Made You Look, Future Crypto Whale, ENIAC, Bruno, Shyam, Lee, Cryptechology, said that name already. CM, Deborah, Benjamin, welcome. So let's go ahead and jump into this. Let's talk about crypto, the price activity we've seen lately. Have we reached a bottom? What do I think is going to happen next? Okay, so let's just go and pull up the crypto prices here. So we've seen, so Bitcoin, broke into the high $30,000 price range yesterday. I think it was 39,000, something like that. Ethereum also broke into the high 2,000s as well. We've lost, 20+% in about 7 days as of yesterday. Okay, and we're starting to see some recovery. So, we see some people on social media basically a little overly exuberant that, the bottom's in and we're just going to rocket back off into infinity. And so I want to talk about what some possible scenarios are here, okay? So let's start off with some takes on what's happening with the market in general and what it looks like, because yesterday I talked about how the market doesn't really look like anything that I've seen in crypto in the past, okay? Crypto kind of has a funny way of doing this where basically the outcomes that people expect to happen are not what happens. Sometimes what happens is the least likely thing that other people are expecting. So, talking about yesterday is a possibility, are we in some sort of bear market for crypto? And I saw a take on this that I wanted to pull up and read on screen today because I thought it was pretty good. So basically, by the way, when crypto prices dropped 40 to 70% in 2 months, which basically that's what Bitcoin did, it dropped by about 40%. Some other altcoins dropped by 70%. That's a bear market. So the Fed caused it. The issue is by the time it becomes obvious, it's usually too late. So I mentioned something similar to this yesterday, which is what we've seen in crypto prices over the past couple months. It's hard to not say that that's a bear market of some kind. Okay, you see this, right? This is a long period of time. It's over 2 months, all right? And you can't not say that that's a bear market. Now the question is, in crypto, people talk about bear markets because they're usually referring to the long, harsh, wintry, grueling bear markets that we've seen in the past. For most people in crypto, they're talking about the last one, which was at the top of 2017, all throughout 2018, and even into 2019, depending on how you measure it. Okay, so. The question is, has the market structure of crypto changed? All right. Are those a thing of the past? Are we in some sort of new market where the bear markets are shorter? Okay, the drops are less severe, but we still see some longer global uptrend. All right. That's a question we have to ask ourselves. And we're getting to the point where that we're going to find out pretty soon, based on what happens probably over the next couple of weeks. So, if you zoom out a long enough time scale for crypto, like you could always say that crypto is only in a bull market, always, right? Because if you just measure here, like the price just keeps going up despite these long corrections. Now it's like, you know, at some point you have to have some meaningful interval where you cut off that to make some financial decisions, because vast majority of people, want to see investment gains within a matter of a few years, not 10 years, right? When they come into crypto, because they typically come into crypto to make gains faster than somewhere else. So you could measure like that. Say crypto has just been in a bull market ever since the beginning, right? But then as we go on in time, we can start to delineate those bull markets and bear markets. And what we might be seeing here is that these things are shortening, right? Like that this was shortened. Now, time will tell. But what I can tell you is that whatever we're seeing right now does not look like 2018. I mentioned this yesterday, but I want to bring this tweet up on screen because, it's from another guy in the space, Eric Connor, who's got a lot of great insights in this space. He's been around this space for a long time. And this is very similar thing I was saying yesterday, which is comparing today's market to early 2018 is just silly. Anyone doing that is likely wasn't around then. In 2018, we had large ICOs dumping ETH, no mainstream adoption, Bitcoin maxis dominating narrative, and major funding concerns. Early 2022 is nothing like early 2018, okay? So that's from a fundamentals perspective. I mean, also from a price action perspective, we've just been in almost like a straight down line that looks like it's going to zero ever since then. And crypto's not dead. We're not going to zero. It's highly unlikely that's going to happen. And we haven't seen any bounces like we did in 2018. So that leads us to the next question, which is, is the bottom in? Well, I want to reiterate something I said yesterday, which is what's happening in crypto right now is definitely not in isolation, okay? As we saw from that earlier tweet, that's echoing a lot of what I'm saying is, so the death knell that we saw at the latest price action have definitely been influenced by the comments of the central bank of the United States, all right? And we're seeing that reflected across all markets, okay, especially in the stock market. So, I think it's too early to tell if we're at a bottom, right? I think there's a good chance that we're at a bottom, but it's too early to tell. But what are some things that I would be looking for? Well, first of all, I would like to see some sort of convincing recovery also in the stock market. People talk about hoping that crypto can be uncorrelated from stocks, be this, uncorrelated asset class. I don't think we're quite there yet in terms of like when bad things happen in the overall global economy. Basically, if that hits the stock market, it's going to hit the crypto market too. It just did. We saw proof of that. And so in a similar way, I'd like to see some recovery in the stock market as well before we get too excited about what's going on in crypto. Because I think similar factors are at play here. But in terms of likelihood, one data point that points towards likelihood that we're close to some sort of bottom, if we're not there yet, is the social sentiment. I mean, it's really in the gutter. It's really, really, really in the gutter. This is some of the most bearish that I've seen my timeline in a long time. For lots of reasons. I mean, I think, we're getting to the point where, if the price were to go any lower on Bitcoin, you'd be erasing a year's worth of gains. You know what I mean? So I think that's part of the bearishness. A lot of people sound like they want to jump out a window. It hasn't been that bearish in a long time. So I think part of this also has got to do with the fact that a lot of people thought that, $100,000 per Bitcoin was programmed in 2021. Didn't happen. See this disillusionment that just kind of compounds this bearishness. But, my long-term thesis is still intact in my opinion, which is that we're creating technology that has long-term benefits. That as people use the technology, that the value can accrue to the cryptocurrencies themselves. Can there be boom and bust along the way? But if zoom out on a much larger time frame, I think there's a high likelihood that, we will see much higher prices in these assets, and that those investment gains will be faster than many alternatives on the table. So let me know what y'all think down below. Is the bottom in? Am I totally wrong in everything I just said? Do you agree? Let me know. Someone says another 10% dip for the bottom. Yeah, it might be. That's another thing to think about is sometimes when you think the bottom's in, it likes to give you just a little bit more pain. But the good news is, the risk-reward scenario for something like Bitcoin is changing dramatically. And you have to understand this about crypto, which is when you have people who are wanting to allocate, I'm not really an institutional investor, all right? So I can't call how every institution is thinking. But if I had a lot of money, like as an institution, and I wanted to make a bet on crypto, particularly on Bitcoin, which is a pretty, very, very, very blue chip crypto, the risk reward scenario for Bitcoin just changed quite a bit. So what do you think the likelihood is that Bitcoin is going to reach $69,000 per Bitcoin again over the next year? I mean, I think there's a pretty good chance, assuming that we don't go into some crazy bear market, right? So, what's the likelihood that crypto is going to go down another 50% from here? I mean, Bitcoin, back to $20,000. I think it's more likely that it's going to reach $65,000 than go back down to $20,000. So that risk reward scenario has changed quite a bit, which could attract institutions in this space. I'm about people who are pretty smart and want to counter trade what's happening, buy when other people are fearful and sell when other people are greedy. That being said, I'm not an institutional investor, and not all institutions are going to work the same way, right? But some people might see this as the perfect entry for them. Okay, so another thing I want to look at here is something that came across my desk yesterday. So Associated Press to launch NFT market for photography. Okay, so we're talking about NFTs, what they can do. And we're seeing more and more use cases come out for this. And NFTs actually gaining pretty significant adoption. Okay. So we're actually seeing Associated Press, which is a pretty big name, all right, do this. So we'll launch a non-fungible token marketplace built by blockchain technology provider. I don't think I've ever said this name out loud before. Zua, I hope I'm saying that right. Where collectors can purchase the news agency's award-winning contemporary and historic photojournalism. So it's going to debut on January 31st. We also talked about NFTs potentially making an appearance at the Super Bowl. That's just a rumor. We don't know for sure. The initial collection will feature photography by current and former AP photojournalists and selective digital enhanced, et cetera, et cetera, et cetera. Okay. So yeah, it's pretty cool. It's going to launch on Polygon. NFTs will be minted on the Polygon blockchain. It's environment and friendly Ethereum compatible layer 2 solution. I have a feeling they had to email somebody to write that line for them and say, how do I say this? So yeah, it's pretty cool. So, NFTs continuing to gain popularity, experiment with use cases, see pretty significant mainstream adoption. That's the thing about, about the crypto markets. Like the whole nature of the space has completely changed. I mean, I'm seeing massive YouTube accounts talk about their bets for crypto in 2022. A lot of, finance type channels talking about this that are not crypto specific. Okay, like we have reached a new level of participation that is far beyond what we were in 2017, 2018, kind of alluding back to that tweet I saw a minute ago. Now, some people say, oh, all these big channels talking about that marks the top. I think this time is different in that regard. You know, I really do. All right, so let's go ahead and check on the status of some stuff I haven't looked at in a while in these live streams, but it's actually relevant to crypto prices. Okay. So let's talk about what's happening with Ethereum after the EIP 1559 update. So now we're now burning ETH. Part of a big factor on ETH prices is going to be the supply side of ETH's economics. Okay, so basically, we're burning ETH when new transactions are created. So whenever you are sending a transaction from one account to another, you're paying a fee to do that. But part of that fee is getting burnt or erased from the network. Okay. So we can see the impact of that. We have -1%. Let's see here, inflation per year. If you simulate the merge, that's -5.2%. Okay. So right now, we are burning more ETH than we are creating. So ETH, as of right now, on a 1-day time frame, is deflationary. Now, if you zoom in on 7 days, that changes, right? It goes to positive. But over the past day, ETH on average has been deflationary. So what does it mean by that? So people talk about ETH being deflationary. It is deflationary sometimes, but if you zoom out on a year time frame, okay, or something like that, not quite. So basically, whenever we're burning ETH, whenever new transactions are created, we're also creating ETH every single time a block is mined. So understand how this happens. If I send a transaction, I trade on a DEX, I buy an NFT, that is a transaction. And like you might see it on Etherscan. Like I'll just show you. Do a little learning here in case anybody doesn't know how this works. Let me just see here. I'm just going to pull up literally a random transaction on Etherscan. Okay. So this is just a random transaction. I don't even know who this is. They revoked WETH from trade on AnySwap. So basically they said, we're not going to let you trade my WETH on AnySwap. So this is from this address. Let's just pretend it was an ETH transfer where you sent ETH from one account to another. Okay. So this is a transaction that gets included in the blockchain. These transactions are bundled together into blocks. All right. You can see the block number. And this block has a bunch of different transactions inside of it. All right. And these are the blocks that are chained together, making the blockchain. So anytime a transaction is created, ETH is burnt. And you can actually see the burn here. You can see, this much ETH was burned, $12.40. All right. You can see the base fee. All right. This is the part that gets burnt. Or sorry, yeah, the base fee is what gets burnt. The base fee price, okay? So anyways, but whenever you create a block, okay, that's the thing that contains all these transactions. Anytime enough transactions get together to make a block, there's somebody mining the chain right now because ETH is mining at the time of recording this video. Anytime that block is mined and included into the blockchain, new ethers gets created to reward that miner, okay? And so here you can see, I don't see if they have the, anytime ETH is created, you can see the block reward. That's this right here. This is the miner, Flex Pool, okay? This is their address. This is the block that was created. And here's how much ETH was added in that block, 2 ETH, all right? So these 2 ETH is the block subsidy plus the miner tips. All right. So anytime, basically about 2 ETH is created every single block. And so anytime you see these blocks here, these are different blocks and how much ETH is burned in each block. Anytime this number exceeds 2, it's a deflationary block. But anytime it's less than 2, it's an inflationary block. Okay, so the ETH supply is increasing whenever this block is mined. The ETH supply is decreasing whenever this block is mined. And then you add all that up together and you say, over the last 1 day, 6.6 million ETH has been created and 5.4 million ETH has been, 5.4 million ETH has been created, 6.6 million ETH is burned, and that leads to, you just add them together, positive and negative, minus 1% deflationary on the yearly time frame if you just look at yesterday's data. Now you can take that out to 30 days. You can look at all ever since the IP59 went live, 7 days, 1 hour, right, et cetera, et cetera. So now that's going to drastically change whenever we go to proof of stake. So right now we're on Ethereum 1.0. We're migrating to Ethereum 2.0, okay, where we will have proof of stake. And whenever we go to proof of stake, ETH's going to undergo this triple halving, okay? So this 2 ETH block reward here is going to go down to 0.5, okay? So it's called the triple halving, 2 to 1, that's 1 halving. Well, sorry, it's before. So it's 4 to 2 to, yeah, sorry, I get the numbers mixed up off the top of my head, but it's going to go 0.5, which is the triple halving. It's cut in half 3 times, okay? So that is going to make ETH net deflationary based on current network activity if you zoom out like on the 30-day time frame or the all time frame. Okay, assuming that the amount of activity on the Ethereum network stays the same, okay, and doesn't decrease, which I don't see any reason why that would be the case. You've got minus 2.4% inflation or 2.4% deflation. Somebody says staking would further decrease circulating supply, correct? Very likely. It depends on how many people stake, but I think the incentives are there for the return to lock up more ETH. So if this person's saying like, hey, we're burning ETH, but then we're also going to lock up more ETH with staking, I think that's also true. Now, the catch there is what's going to happen whenever ETH1, what's going to happen whenever the beacon chain gets merged back into the main chain is if all that staking capital becomes liquid, are people going to take it out and dump it? So there's a lot of people who are saying, hey, so basically understand this. We have ETH 2.0 being built right now, this thing called the beacon chain where there is proof of stake live where you have validators and people can stake their ETH, but it's locked up. Okay, you can't get it back until the merge happens. And the merge is supposed to happen probably in Q2 of 2022, if I had to guess. We have this thing called the difficulty bomb on the Ethereum chain that is programmed for the end of Q2 2022. So that, long story short, that basically means the merge needs to happen before then. And so basically, whenever that does happen, the ETH is going to become liquid and it's going to become unlocked. And a lot of people think, hey, people who have staked for, almost 2 years at that point, a year and a half, that what are they going to do? The ETH price has risen significantly, probably. Whenever that event happens, a lot of people are going to take the money and dump it, and that could cause sell pressure on ETH. So some of the, benefits that we get from ETH locked up in staking or ETH, the circulating supply of ETH decreasing in staking could be offset by sell pressure that happens. Now, if that coincides with a high dollar value on ETH, like let's say ETH, decides to recover and we do get some sort of parabolic rally up to like $10,000 per Ether or something close to that, or maybe even beyond that. And by the time the merge happens, a lot of people think that could mark the top, but we'll see. That's a pretty widely disseminated view. And as we've seen in crypto over the past year and change, the popular predictions don't tend to work out. Somebody says ETH price is going to dump as soon as they release ETH 2.0. That's the other factor. Is it could be somebody saying that in the chat. That's not my view necessarily. It could be a buy the rumor, sell the news situation. This is really common in crypto, also common in stock market, also common like everywhere. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. And if you're as fast in this technology as I am, you want to get your hands dirty, how can you get started today? You go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, actually, I've become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks.